I want to get your reaction to this because we're all trying to figure out what to do on this Friday morning here. Ryan Dietrich of SIPC writes this: the S&P 500 is about to be down 7 consecutive weeks. First time since a record 8 in a row since 2001. The only other times in history was 8 in 1970 and 7 in 1980. Is it possible? Is it possible, despite Jim's call for 100 basis points, that we might have reached a bottom? Is it? Anybody want to take that? Anyone want to vote in favor of that, Brenda?
Well, I think it's hard to know exactly when the bottom will be felt here, but I will say we are in such an extraordinarily unique moment in history that it's not surprising that there's just a lot of uncertainty out there. But I think if we do start to see inflation come down, and I think, we're hearing a lot of signs now, especially in the retail sector this week, about inventory starting to build up, particularly in the goods sector. And so that should flow through in terms of discounting happening and potentially have a positive impact on inflation, meaning causing it to come down a little bit. So I think that I think is what it's going to take in order to move the market here and ultimately allow people to step back in when we do have a clear sign that inflation is beginning to come down. And I can't say it's going to be next month per se, but I think given the signs that we've seen in the goods sector, it suggests that it could be close.
Sarat, you agree, or do you think that this is a sign actually that we have runaway inflation?
So I think if you look at the recent data, inflation is very strong. And I think we're all hoping that inflation comes down. But right now, you still have supply issues in China. You still have a war going on, and you have input prices that are going on. And if you look at just the data and consumer staple stocks that are supposed to really be the strong ones, they got sold off. So I think the market today, Andrew, to your point, I'm not sure we stopped bleeding yet. I think there is some more blood letting go. It's very different this time than it has been in the past. We are still in a rising rate environment with the uncertainty. Having said that, I think companies are getting to be cheap. So if your outlook is a year and longer, it's definitely some great opportunities. But right now, things could get a lot cheaper, especially as we're looking at the Fed to raise rates, and whether it's 50 or to Jim's point, is it going to be 100? It's going to be a lot more than people expect. And the Fed's not going to back off. So the markets are reacting, and they reacted 7 weeks in a row to this uncertainty.